Hi, this is the Modern Savvy CPA. I'm coming to you with my series on financial literacy, the topic of financial literacy. I am coming today with my next topic. Last week we did budgeting. Mind you, all of our topics, all of our 10 topics are interrelated because they are all part of your financial literacy workbook, so to say. So they are interrelated. There are going to be some topics that we talk about that coincide with each other and things like that. So today we're going to talk about savings. So how I think of savings, and a lot of people question me on savings accounts and savings and things like that. So number one, just like every other financial literacy topic, it's never like a one answer, like a simple answer. Everything is customized to how you want it to be customized. These are just my views on the best way to do things that have worked for me, tried and true situations where I've seen with clients, and my decades of experience personally and professionally. So it's just my take on things and what my beliefs are and how I feel, these things are going to work. So savings, for me, I always think of savings with a purpose. I don't believe in just putting money in a savings account and it has no purpose. All of my savings goals have pots. You've heard me talk about my pots. The pots at the end of the rainbow. The savings goals are the end result is the pots at the end. So, that's usually how it is. I am saving with a purpose. So, 39% of Americans can afford to pay only about $1,000 of emergency without taking on any more debt. So one of the things that we're going to talk about is the emergency fund saving spot. So the first priority that you should be looking at as one of your saving spots. So we're going to talk about all the saving spots. You know how people talk about buckets? Well, for me, they're pots. So we're going to talk about all the different saving spots that I think that you should think about. I will tell you about the ones that I think that should be in everyone's budget, everyone's financial goals. And then I'll tell you about the others that vary depending on the time of your life, your personality, what you like, what your priorities are. So just like everything else, there are fixed saving spots that you should be always looking at. And then there are variable saving spots that you should be looking at depending on what your personality, your goals, your life is all about. So the first saving spot is definitely the emergency fund. The emergency fund pot is something that you want to have. There's a recommendation to have between 3 and 6 months of expenses saved up in your emergency fund. We'll discuss later on where you should be saving your emergency fund, but definitely that is the number one pot that you should start with, because you don't want to lose your job or have any unforeseen expenses that will happen, and you will have to go into debt because you do not have an emergency fund. So that is something that you definitely need to think about. There are other types of savings spots that we're going to talk about today. For example, your dream vacation, down payment for your home, savings for, a brand new luxury car, all these things. Like I said before, there's no real magic pill or secret to saving money. People might come out, I'm always seeing these things. There's a hack for this and a hack for that and whatever. Well, if it's too good or too easy, then likelihood is it's not going to happen the way that you want it. Hard work pays off, and if you do hard work smartly, then it's not as hard. So that's definitely something that you want to think about. So, that's one of the things. So, one of the things that we need to look at when we're organizing our savings goals is the main thing. What we spoke about last week is budgeting and making sure that we trim the fat from your budget. We spoke about getting rid of don't buy anything that you don't need. We spoke about making sure you're comfortable with what you're buying. Don't buy regret purchases. If it's a big purchase, you need to be, that should be one of your savings pots. So you shouldn't just be impulse buying. So, living within your means is when you're thinking about all of that. Your mindset is thinking about what you're spending. You have to have a mindset of awareness, and understanding that, you're aware of what you're doing. It's not about, so you want to make sure that you're not overspending and, so then you don't incur all this debt and then you don't know what happened. And the other thing that we spoke about last week is tracking, making sure that you are tracking everything you spend and you're making sure you're categorizing it where it goes and reviewing it. That is a part of our budgeting topic, and it still goes hand in hand with every other topic that we talk about. Tracking what you're spending, it keeps you in control of things, making sure that you have control. If something happened last month that you felt that you did not have control, you can change that this month. So if you keep tracking and you keep looking at your stuff every month, at least every month, then you'll be able to do that. I mean, you can look at your stuff while you're waiting for your kid who's playing a soccer game or a baseball game, because it's an app on your phone and you can categorize your stuff while you're doing that. So it's so simple today with technology, once you get it going, for it to happen. So going back to our savings pots, our savings goal, our goal at the end of the rainbow, you want to make sure that you set your savings goals, whether it's your retirement, you're paying off a credit card that you got before you heard of me telling you not to go into debt and showing you how to track your expense so you don't go into debt. Definitely that's one thing. So again, going back to what we're talking about is saving for a purpose. Find your inspiration for what you're saving for. So it's not just throwing money in an account and you don't know what it is. You want something to fuel your motivation. So like I said, the emergency fund is one of the things that fuel your motivation. So that could be one of your savings pot. Getting rid of debt if you have this, because you don't want to pay for debt. Debt costs more than the sale that you're getting on a dress or the sale that you're getting on a something you buy at Macy's or whatnot. So because the interest rate on that, if you cannot pay it off right away, is the cost. You have to add that on to what that dress actually cost you. So if you don't need that, shop in your own closet if you have to. I've been shopping in my own closet because we're filming in the month of Lent and I gave up shopping for Lent. It was harder than I thought, but oh well. So, but I have been shopping in my closet and I've been finding a lot of stuff that I could use to wear, to use, to repurpose. And, we don't want to overindulge ourselves. We want to make sure that we're enjoying, we'll have more to enjoy later if we're being cognizant and understanding what we're doing now. So other than your emergency fund, when you think you've reached your point in your emergency fund, then there are a few different ones I want to go over with you guys. The next is retirement savings. If you are working for a company that matches your 401k, I cannot say this more than enough time. I will keep telling you guys this every single time we talk about retirement. If you are working for a company that matches the 401k or 403b or whatever it is, if they're matching your retirement, you should at least be putting into retirement how much they're up to what they match. So that is a big savings. That is one of our largest savings when we look at things. I'm looking at people that are in their tax returns for people that are in their 40s and 50s around my age now. Some of them just from their 401k has few $1 million from just putting in, the maximum amount every year. So start early. Soon as you start your job, you start doing that. If you're not with a company that is matching 401k, and you consider a traditional IRA if you want to save some taxes, or a Roth IRA, which is an awesome thing to think about. My youngest son, my oldest son, soon as he started working, we got him a Roth IRA. If I had that when I was in my teens, oh my gosh, I can't even imagine the money I would have right now. And it's just smart money. It's just being smart about your money. So that's one savings pot that I think should be reoccurring. There shouldn't be a end to your retirement savings pot. That one should be on your goal list all the time, your retirement savings pot. Next, I would say saving for your home purchase, the American dream, savings for your home purchase. So, one of the things that you need to do when you're saving you have your savings goals is, we're going to talk about your timelines and your situations and how much you should be saving and things like that. So saving for home, saving for vacation. If you have kids, saving for college, saving for a new car, saving for, let's say you want to buy a rental property, savings for a rental property, those type of things. And that rental property could be a savings too. We're going to discuss that also. So those are a few examples of pots that you would want to have. You definitely want to have the emergency pot in there with a set goal. You want to have your retirement pot with at least the minimum of matching in there. And then your other pots are going to be a little variable depending on what you're saving for. After the retirement and the emergency fund, for me, it is my first home. So your first home is not your dream home. It is what you want to get because you don't want to pay somebody else's mortgage. That's the other thing that I say is when you're paying rent, you're paying somebody else's mortgage. So we want to move from being a renter to a homeowner. Once you are a homeowner, then that's another savings pot that we're going to talk about, that I'm going to explain to you how it's a savings pot. So that's what you need to do. So with your pots. So there could be other pots that have to do with you that you're thinking about, or things that you want to do. So by knowing your situation, so what you should do is examine your situation. After giving it some thought, after you think about things, what you do is you think about your multiple goals that you have in mind, and you think about what you want to do and what your specific goals are, and you look at where you are right now and what your situation is right now, and then what your ambition is, what your short-term goal, your long-term goal, your goals yet to be identified. You start assessing your income tax situation, your budget that we talked about last week, your net worth, which we're going to talk about in a coming session, and having an understanding of all these things that will tell you what your situation is. So that's something that, those are things that we need to think about. So then you start thinking about creating a timeline for your savings. So like I said, the timeline for your retirement savings is from the beginning when you start working to the end when you retire. You save from one to the other. That's my opinion. That's how retirement works. That's the retirement savings. The emergency fund savings is reaching your specific goal for your emergency fund. Once you reach that specific goal, then you're good there. The home, the car, the vacation, the college, all those are timeline goals that you set a timeline, you set an amount, you set a goal, and you think about it. All of these things require research. You need to understand how within these savings goals, what vehicle you should be using for them, which is something that we're going to talk about also. So you want to make sure that you set a timeline. If it's a vacation goal, you want to make sure that you have which vacation you're going to, you've budgeted for that vacation, and you want to make sure that you're doing that. The other things you need to do is you need to use the right saving tools. You should also use the right type of savings account for your goals. So this is where we're talking about the vehicle that you need to use. If you're looking to save money for longer than 5 years, you should consider mutual funds. The stock market on average, of course, it goes up and down. So that's why we talk about the stock market as long-term goals. We're not day traders here. We're not looking at it every day. We're looking at long-term goals. So if your long-term savings goal is more than 5 years, consider your risk level and consider savings in mutual funds. There's also high yield savings account. Interest rate is higher now, so this is something that you might want to consider. There's also money market funds that you could do. Credit unions have really good rate on money market funds, so you should definitely think of that, or CDs. Those are type of things that you should be thinking about depending on your goal, your savings goal. Definitely, you're in your retirement fund. It should be based on two things. Of course, you consult your financial advisor for help on this. I am a certified public accountant. I'm not a CFP, so I always defer to the expert in that specific field and ask that person the right questions. When you're working with your finances, it's not one person that you work with. It's you having the knowledge to hire the right people around you, to have the right advice that comes in. And then you take from all the different areas and you make, good decisions with that. So definitely talk to your financial advisor on your risk level is number one. Your age is number two when it comes to retirement, because that affects how aggressive you want to be. Because most of our retirement, we want to have it either in mutual funds, EFTs, which are exchange trading funds, equities, they historically garner larger returns regardless of the stock market and where it is. On the long run, it's between 10 and 15% growth. So that also should be, if you are younger, you start off riskier and then you move forward. As you move forward and you move closer to the dates where you're going to be taking money out, you want to be more conservative, because at that point you are being conservative. So if you have a combo of everything. So, you do not want to have your emergency fund in something that's locked in for a long time. So you want to consider where you want to put your emergency fund. And that's something that you want to have available. Your emergency fund is something that you want to be able to have available. Which savings vehicle you want to put your emergency fund in, so it will cover your monthly expense if need be. So then our next thing on our savings goals is track your goals. Check and see how it's going. Okay. Look at your retirement once in a while. Probably not when the market is low, but remember, if you do not sell your funds, or you do not cash in your EFTs, or you do not, you are not losing until you realize the money. So anything that's in the stock market or in the housing market or anything like that, if you don't sell it, you are not losing on it until you realize your loss on it, just like you would realize your gain. Realize means it's coming back to you, and whatever it is, it comes back to you, that's it. So until you sell it, it's not realized. So you want to make sure that you're tracking your goals. You know what accounts you're putting your money in, which savings pots is for what. I mean, some of my savings accounts have names on them. It says vacation fund. It says college fund. It says, whatever it is. It says rental, So that's one of the things. So the other thing that I suggest is use technology to your advantage. One of the things is automatically transfer from your checking to your savings pot each month. Just like with the 401k, have the money come out before you even touch that money for your expenses. So I suggest that automatic transfers, divvies it up. You don't have to think about it. You don't have to press a button. You don't have to do anything. You make your goals. You set your automatic transfer. You look at your stuff every time to make sure you're keeping within your lines of your goals, and you do the automatic transfer. So it's not something that you have to press a button. Sometimes it's like writing a check. Some people, it's really hard for them to write a check, or to do something, even though it's something good that they're doing and it's rewards coming back. It's just an emotional thing for them. So doing the automatic transfer takes the emotions out of it, so because digital apps will show you how to do all these things, help you separate out your savings, help you put your things in different pots, those type of things. One of the things that I want to talk about also is how do you keep within your goal and stay with your automatic transfer is one way to avoid overspending. We need to avoid overspending if we're going to be keeping with our goals. So you want to make sure that you use the 30-day rule. I try to use this 30-day rule. For Lent, it was 40-day, but I try to use this. Sometimes I go shopping, I'm window shopping, and I put stuff in my cart. Of course, my virtual cart. And then I think about it. I don't click and buy it right away. I'm like thinking about it. I eye the purchase. I look at it. Do I really need to make this? I put it in my shopping cart and I walk away. I leave it there. They'll send me emails because those retailers are smart. They know what I put in my cart. So they're going to say, oh, you still have time to buy that Jimmy Choo's from Saks. But by then I've thought about it and I'm like, okay, it was on sale, but do I really need another pair of shoes? So definitely it's something that you need to think about. If you want a shorter period for that, 30 days, think at least 48 hours or a week, whatever works for you, but don't impulse buy. Don't click right away. Think about it, talk about it, window shop on it. Because during Lent, I gave up shopping, but I didn't give up window shopping. And boy, have I been window shopping. But half of those stuff I forgot about already because I just, it fed my hunger for the minute. So I'll tell you that shopping is one of my, my shortcomings, if you would say. So that's definitely what we want to talk about is make sure that you do not impulse buy because you don't want to regret. One of the biggest issue that I see with especially rich people who make a lot of money, they impulse buy all the time because they want to keep up with the Joneses. And because they want to do that, they regret buying later. I see it all the time. They buy something super expensive because that's what everybody's doing. And then they're trying to budget their food bill. And they spend tens of thousands of dollars on something that they regret buying. So you don't want to have any regret buys. You want to make sure that you do not impulse buy. You think about what you want. Put it in your cart so you feel better about it, or you feed the hunger of whatever it is that you're doing. So and then think about it. Think about what you're doing. Is that one of your priorities? Make it that impulse buy part of your spending goals. Is if I buy this furniture right now, do I really need it, or can I keep this one for another time? I can use that money in my vacation fund. Would you rather do the vacation fund? Things like that. You always want to make sure that you split your stuff into, even when my husband and I was when we were starting out, starting our kids' college funds, I would put $50, $75, whatever birthday money they would get into their 529. And then down here in Florida, we have Florida prepaid. I would make sure that we have them in their Florida prepaid. Now my one son is going to college without loans. So, and a condo that he lives in, that is one of our saving spots. So that's one of the things that you need to look at. Do not impulse buy, because the reward of a well thought out buy it will give you hands down a lot more than your impulse buying. you want to make sure that if one of your pots, let's talk about a few savings pots that I believe in and that I have lived. So one is college funds. I believe that helping our kids with college education, understanding the cost of college education, which most of our college students do not understand. Their parents do not understand. They do not know how to compare the college cost to the degree, if it's marketable. If the child likes a certain area, you can pick a degree within that area that it's marketable for them. Have them try things out to see what they enjoy, what they like, what they don't like. You don't. Yes, we don't want to pick a degree just for the money because we're not going to enjoy it. Trust me. Our main goal in life is to be content and happy. So we want to be able to do that within our means. We want to be able to do that without racking up student loans. We want to be able to do that, live a comfortable life. And the way that we do that is taking control of our money, making our savings goals, prioritizing what they are, be realistic about it. Yes, your child can go to Harvard or can go wherever they want in terms of a degree, but while you're looking at that school, part of when you're looking at that school is looking at, one, how much money have you saved up for that child for that school, what their financial package is going to look like, and how much loans are they going to end up with when they're done. And the next thing that you need to look at, the last thing you need to look at is what is the average salary for the degrees that they're coming out with. Will they be able to pay back that loan? Because you can go to community college, or you can go to state college, or you can go to private college, or you can go to Ivy League. There's a vast difference on the cost of college. The thing about America, looking at it from a global perspective, is that I always say that you can get whatever you want here. You can furnish your whole home. You can live comfortable in a small home. You can live. It's how you want to live, where you want to live, what kind of things you want to furnish that home with, what kind of home you want to live in. So some of us, when we're starting out, we have to realize that we're starting out. We start somewhere. You take what you get until you get what you want. If you wait for that dream home and you don't start with the starter home, you're not going to skip 5 steps and get that dream home unless you're winning the lotto somewhere, or you're going to be above your means. So when you start, I started with a condo. Then we moved into a small house. Now we moved into a bigger house. Now we're in a bigger house. So you move according to where your budget takes you. You move according to your means. So you start off with what you can get, and then you move. If you're renting all that time until you get to your dream house, you're never going to get to your dream house where it's a comfortable within your budget for you, because you want to be able to gain equity as the time goes by. So when you start off with your condo, you're going to have equity in there. When you decide you want to move up to the next level, or you're ready for the next level, or maybe you have kids and stuff like that, or whatever it is, then either you can sell your condo, take equity out of your condo, have money saved up from that because you're not paying the high rents. And because while you were living in your condo, you were paying down equity. If you lived there for 10 years and you got a conventional loan, part of your condo payment is a savings pot. Let's just say you're paying $1,000 in mortgage. At least at the beginning, you can start off with $150 as paying down equity. By the time 10 years goes through, maybe $300 is paying down equity. I'm not even counting the appreciation of the real estate market. I'm just counting it as a savings pot. When you make a mortgage payment, you pay principal. Principal is a savings pot. So it's a way to save. Whereas if you're paying $1,000 in rent, it goes to your landlord's mortgage, and they're the ones that's going to be paying down their principal, and they're the ones that's going to be able to make the money from you there. So if you make that sacrifice, and between rent and mortgage these days, it's not a huge thing if you are willing to take what you get at the beginning. Start small and move forward. It's a building block. You do not start with your BMW, or you do not start right off college with a seven figure car, or you don't start off with a 7-figure house. You start small and you move forward. That's how people build wealth. It doesn't come automatically. It's a stepping stone. It's one block at a time. So you need to keep building your savings blocks, and there are ways to do that. One is your principal, your mortgage that you're paying down principal. That is a savings pot. That is one of the things that you're doing. After 30 years, if you live in that place for 30 years and you haven't taken any money out, you're done with your principal. Let's say you bought that condo for $200,000. I am sure with the way the real estate market goes, there's some appreciation. Let's say it only appreciated $100,000 in 1 year, which I doubt, in 30 years, which I doubt it. But in addition to the appreciation, you have paid off the mortgage, and you're paying off the mortgage by paying principal, and that is one of your savings spot. I bet most of us don't even think about it like that. So I want you to have that money mindset going, thinking of where your savings pots are, thinking of how you can reallocate your money, your finances to meet these goals. You have to be proactive if you want to control your money. You have to be in there being proactive, understanding, looking, overviewing, so you don't overspend, and you're focused on what your goals are, and you're making gains on them, and you're pursuing them properly, and you can move on to your other financial goals. So you want to make sure that that you're doing all of that. Those are the things that you need to think about when you're thinking about these things, when it comes to savings. So you want to make sure you're thinking outside of the box. You want to make sure that you're thinking about building your wealth. When you first start out, you're starting out thinking of building wealth, because you just don't want to live within your means without moving forward in life. So you're living, you're learning, you're moving forward. You want to also make sure that you hire the right people to help you. Listen to the right people. I'm talking to you with 3 decades of experience in accounting, finance, tax. I used to balance my father's checkbook at 14 years old. So this is ingrained in me. I've been doing this for the longest time. I've had experience with many, many clients. I've had experience myself with trial and errors in situations. So I'm telling you from experience that all these things that we've talking about with our savings goals and our savings pots, they are achievable. I am living proof that they are. A girl who was 9 years old when she came with her dad to this country, and now have built her wealth and continue to build her wealth. So that's our second topic, which is our savings goals and our savings plans and different avenues that we can save. We've gone over retirement, emergency fund, home fund, having you, in addition to the home fund, your principal pay down of your mortgage is also a savings pot. All the other things that you want to think about, that you want to prioritize. So you need to be active within your finance in order for you to be able to control it. Stop thinking that it's a taboo subject. This is part of your life, and if you keep working at it and do not think it's a taboo subject and work within that area, it's really not that hard. Again, this is Sherron, the Modern Savvy CPA. I would like for you to definitely subscribe, and And follow me on all of my social media, and I will talk to you next time on our next topic, continuing our series on financial literacy. The information and views on this video is provided for specific subject matter only and does not reflect official opinion or position of the Modern Savvy CPA LLC or Sherron Permashwar CPA. The Modern Savvy CPA LLC or Sherron Permashwar CPA were not engaged in providing legal, tax, or accounting services. Before taking any action based on this information, we strongly encourage you to consult with a professional accounting or tax advisor about your specific situation.